Tantor Audio, a division of Recorded Books, presents The Day the Bubble Burst, A Social History of the Wall Street Crash of 1929, by Gordon Thomas and Max Morgan Witz. Narrated by David Colacci. Author's Note: The Wall Street crash of 1929 was the most climactic financial disaster in history. It still affects all our lives today. Periodically, when the market declines, the question is asked whether history will repeat itself. For a decade or more, those warning of a likely repetition have been ably led by Professor Kenneth Galbraith, whose own book on the economic background to the crash has become a standard work of reference. That other doyen of American economics, Professor Milton Friedman, sees monetarism as our financial salvation. Both agree that the 1929 crash was a financial turning point. Prior to that, the business of money was held to be the prerogative of businessmen. The crash showed how widely that prerogative had been dispersed. The crash affected everyone. It was the precursor to the Depression. As such, it was not only a financial collapse, but a human, family tragedy. In a way, it was worse than war. One of those hurt explained, "In war, Dad goes off, a hero. But soon after the crash, Dad was always at home. Nagging doubts were raised. Wasn't he smart enough to get a job? Was he really trying to get work? Doubts about Dad as a person grew and remain to this day." How such a situation came to be, we have tried to explore and include. Our intention is to present for the first time a full social history of the crash and its global impact. While the boom was essentially American, the ramifications of the crash were worldwide. It is our contention that the story of the crash is best told through the lives of people, among them the people who sowed the financial whirlwind that would scatter not only them but untold others in penury. They were victims of a financial pandemic the like of which the world has never before or since seen. Previous works have tended to restrict themselves to the New York market and its immediate environs, an admirable enough decision, but one that inevitably reduced the horizon. Our journeying into the hinterlands far beyond Wall Street produced a wealth of information buried in arcane documentation, private reports, and the accounts of eyewitnesses hitherto unrecorded. While ours, too, is a financial story, it is also a social study of a unique period in history, peopled with characters rich in every sense of the word. There is Jesse Livermore, arch manipulator and nemesis of the great bull market, locked in financial combat with great bulls like John J. Raskob, Billy Durant, and Charles Mitchell. Against the background of their wheeler dealing, enough to keep most men fully occupied, Raskob is preparing his own monument, the Empire State Building. Durant is running a single-handed campaign to overthrow the policies of the Federal Reserve Board. Mitchell, chairman of America's biggest commercial bank, is, like the Artful Dodger, creating a scheme to avoid paying income tax on his millions. There is A.P. Giannini, founder of the Bank of America, hurtling around California in a Rolls-Royce dressed up as a fire truck, planning his latest moves in another great conflict, this one with the most powerful private bank in the world, the House of Morgan. There is Joe Kennedy, founder of a dynasty, self-made millionaire, determined to revenge himself on Jack Morgan, whose virtually last public appearance is with a midget in his lap. There is Henry Ford, a vowed enemy of Wall Street, unwittingly providing the fodder for Hitler's anti-Semitism. There is Clarence Hatry in London, whose ambition some believe contributed to the crash. There is Mike Meehan, who put Wall Street on the Atlantic. Talking to the sons and daughters of these men, studying their contemporary writings, their diaries and office papers, the unsuspected connections between them, the tangled web of high finance became clear. Often publicly distanced from each other, they are in the end drawn together into Wall Street by the mesmeric effect of the market. Their decision-making touched not only almost everybody in America, but also countless millions around the world. Charles Mitchell's decision to float a new bond affected the lives of Brazilian peasants. A loan from Jack Morgan helped to prop up Mussolini. Nazism grew in part because of the decision of American financiers to support the ailing Weimar Republic for profit. We have tried to look at the effects on all strata. On the one hand, there is Winston Churchill, who lost money, and a member of J.P. Morgan and Company whose wife dismisses the crash as no more than the rattle of teacups. On the other, there is a young flapper and a vivacious bootlegger, both in a sense in the market, who, like so many others, are scarred forever by men they never met and decisions over which they had no control. Few man-made events, short of the world wars, created so much pain and bitterness, and the fear it could occur again. Perhaps the only real protection against that happening is to have an understanding not only of why it happened, but of what it was like to be there when it happened. It began so promisingly, the events leading up to the day the bubble burst. G.T. MMW, April 1979, Ashford, Ireland. October. This is one of the peculiarly dangerous months to speculate in stocks. The others are July, January, September, April, November, May, March, June, December, August, and February. Pudd'nhead Wilson, Mark Twain. The most disastrous decline in the biggest and broadest stock market of history rocked the financial district yesterday. The New York Times, October 25, 1929. The fundamental business of the country, that is, the production and distribution of commodities, is on a sound and prosperous basis. President Herbert Hoover, October 25, 1929. I appeal to movie exhibitors to show pictures that will reinstate courage and hope in the hearts of the people. Jimmy Walker, Mayor of New York, October 29, 1929. Stock prices virtually collapsed yesterday, swept downward with gigantic losses in the most disastrous trading day in the stock market's history. The New York Times, October 30th, 1929. There is nothing in the business situation to warrant the destruction of values that has taken place in the past week, and my son and I have for some days past been purchasing sound common stocks. John D. Rockefeller, Sr., October 30th, 1929. Sure he's buying. Who else has any money left? Eddie Cantor, October 31st, 1929. On Fifth Avenue, police found a parrot screaming, "More margin, more margin." Wire service report, undated, unverified. The situation has been reached in New York hotels where the clerk asks incoming guests, "You want a room for sleeping or for jumping?" And you have to stand in line to get a window to jump out of. Will Rogers, November 20th, 1929. Chapter 1. The Rampaging Bull. One whang of his hand-tooled gavel against the fluted gong would stop everything. It would end the action at Post 2, one of the stockade-shaped trading counters that had been under siege by brokers since early afternoon, as U.S. Steel continued its giddy climb. It would quiet the harassed clerks inside Post 9, where Standard Oil of New Jersey, after a slow start, had suddenly outpaced the trading in Sears Roebuck, another of the Post's lively stocks. It would still the flashing numbers on the black annunciator boards which called traders to their posts for urgent messages from their offices. The gong would herald a pause for the 1,145 telephonists. It would ease the pressure on 500 page boys, 280 tube attendants and quotation clerks, 80 bond clerks, and 200 specialists clerks, essential support troops for the delicate financial maneuvers performed every minute in and around the trading posts. Walking steadily, watchfully, freezing with a glare any overactive page, nodding to the famous, proud of all he could see, William R. Crawford, superintendent of the mechanical department of the New York Stock Exchange, was acutely aware of the power embodied in his gavel. His progress across the 16,000 square feet of recently felt-padded floor, insulation that effectively reduced the noise level in the cavernous room, had all the quality of a ritual. It once led a reporter to describe Crawford as Mammon's Lord Chamberlain. The superintendent had not been amused. But he still liked to believe that the moment he used his gavel, the business of America would be fixed and frozen until the following morning. Now, as he made his measured way across the more than quarter-acre of sacrosanct floor, his experienced eyes could see that it had been another highly satisfactory day for the elite in the room, the 900 brokers, each a member of the exchange and the only persons on the floor permitted to trade. At Post 1, United Aircraft was up a few points, a sign of the growing public enthusiasm for air travel. Chrysler and General Motors were trading strongly at Posts 2 and 4. Shares in the railroads, Pennsylvania, Rock Island, New York Central, New Haven, and Union Pacific, were being bought and sold briskly, as they had been for months now, every sale marking a heady profit for some investor. As usual, the biggest crowd was gathered around Post 12, the radio post, where the whiz kid of Wall Street, Michael J. Meehan, presided over the wheeling and dealing in RCA shares. Crawford was fond of saying that anybody wishing to check the pulse or the mood of America need only walk among the 18 posts. Each, with its group of designated stocks, reflected the unprecedented boom sweeping the nation. He believed that seeing these posts would reassure anybody that the millennium's arrived. Stocks in Woolworth, Macy, Montgomery Ward, Safeway stores, and General Foods were up, reflecting the mass marketing techniques sweeping the United States. The very name of some of the shares indicated America's belief in her global destiny. International Nickel, International Tell and Tell, International Match, International Harvester. Crawford and many others who spent their working days on the exchange floor were firmly convinced that the world outside their heavily draped sanctum depended for its prosperity on the financial juggling performed there Monday through Friday from 10 a.m. to 3 p.m. and on Saturdays until noon. This Monday at 2:59 p.m., exactly on schedule, the superintendent reached a small rostrum projecting in mid-air from the south wall. Above him, an annunciator board continued flashing up white numbers. Flanking the board were the Stars and Stripes and the blue banner of New York State. Similar flags hung at the other end of the room. Limp and lifeless, collecting dust, the emblems were unruffled by the ebb and flow of groups of traders forming and reforming, scurrying, even at this late stage, from one post to another, buying and selling at a nod, on trust. From his pulpit, Crawford could see the strategically placed stock tickers. Recently, he had supervised the installation of ingenious reflecting devices, which threw the magnified quotations from the paper tape onto large screens visible to everyone. It was the latest in a long series of improvements that had made the New York Stock Exchange the most modern in the world. His gavel would not immediately silence the tickers. They would continue to run for some minutes afterward. How long would depend on the volume of trading in these closing seconds. Each ticker, like thousands of others linking the New York Exchange with other exchanges and brokerage offices throughout America, was under a round glass dome. not unlike the one that used to encase the wax flowers on the parlor table of Crawford's grandmother. Her grandson was responsible for the maintenance of the small brass mechanism under the glass. It was a simple enough device, two little rollers pausing as they passed through printer's ink before beating a light tattoo on the narrow strip of white tape running through a slot in the side of the dome. All over America eager eyes perused the identical spirals of paper falling to the floor, which spelled out new highs in railways, oils, and metals. 500 miles of tape, Crawford would recite to visitors, ran over the spindles of the tickers for every million shares traded. From time to time this past year, the tickers had given news of setbacks in the market, to be swiftly followed by an even greater upsurge in value, sometimes as a result of the pools, syndicates of powerful investors, putting their huge financial resources behind a stock, spiraling it to new and dizzy heights. Day after day, a vast and growing public continued to register its faith that what goes up need not come down. The clicking of tickers had shown Americans a quick and easy road to wealth. Now, at precisely 3 p.m., this Monday, December 31st, 1928, William Crawford temporarily halted the progress down that road with a single strike of his gavel against the stock exchange gong. Another market day had ended. But this afternoon, instead of going back to their offices or to their homes, the great mass began to move purposefully across the floor, treading through thousands of canceled calculation slips and miles of discarded tape. Eagerly anticipating what lay ahead, some of the younger men broke a strict rule of the exchange. They began to run toward the doors leading to the visitors' gallery. For the past 300 minutes, the 5 hours of trading, the gallery, running along the Broad Street side of the exchange, had received a steady stream of visitors. In spite of the bitterly cold and damp weather, hundreds of people, native New Yorkers and visitors to the city, came to peer down on the trading floor, to witness for themselves the most extraordinary economic happening in the history of America, the bull market at full rampage. Throughout 1928, the double sensations of the stock market, unprecedented volume and soaring prices, had been front-page news. There had been 2 major breaks, in June and December, but they were quickly forgotten. Day after day, month after month, the market had surged upward, carrying favorite stocks into the Empyrean. Radio Corporation of America had gone from 85 to an incredible 420 during the year. Soon it would be due for a split-up. An obscure company called Western Warehouses had leaped in similar fashion. They, and the shares of 100 companies like them, rose mainly because, in Crawford's opinion, the titans of the market wished them to rise. It was to catch a glimpse of those titans at work that most of the spectators in the gallery had come to the exchange. On this last day of the year they stared down on the floor, trying to spot the men whose boldness and daring had turned them into new, authentic American heroes. The gray-uniformed guides had patiently pointed out Michael Meehan by the radio post, where the trading in RCA shares had made men, including Meehan, millions overnight, or Frank Bliss, known for his sudden, unexpected forays into the market and immortalized by the media as the Silver Fox of Wall Street. And everyone wanted to learn whether the infamous Jesse Livermore was playing the market that day. For years, the taciturn, chain-smoking New Englander, dubbed the Boy Plunger by the media, had been a living legend because of his reputation for single-handed attacks on certain stocks, pushing their price down. All day the gallery buzzed with informed gossip. Spectators, who a year ago did not know the difference between a bear and a bull, now talked knowledgeably of selling short, as practiced by the great Livermore himself. They endlessly analyzed the current moves made by other market giants, Arthur W. Cutton, Charles Topping, the Fisher brothers. Every word these operators uttered in public was slavishly reported in the press and on the radio. The stock exchange guides were used to dealing with the blandishments of attractive female investors anxious to meet famous traders. A woman's magazine had recently reported that stockbrokers equaled movie stars in sex appeal. To avoid the risk of a sexy siren waylaying a trader, on this last day of the year, the guides had cleared the gallery well before William Crawford's gong ended trading. When 3 p.m. was announced, a 5-piece orchestra began to play at one end of the gallery. The guides opened burlap bags of confetti, ticker tape, paper hats, and noisemakers. From the Stock Exchange Luncheon Club on the 7th floor, waiters filed out of the kitchen carrying silver tureens. The club was one of the most exclusive in New York. Few non-members had ever been inside the spacious room to admire its collection of early American prints, let alone to dine off one of the most sumptuous menus in the city. An outsider needed 8 favorable votes to be admitted. 2 blackballs meant exclusion. The credit limit was $100, even for members like Percy Rockefeller and Jack Morgan, who were individually worth millions. In solemn procession, the waiters marched into the gallery with tureens of clam juice cocktail that for the past 20 years had been a favored beverage among brokers. The cocktail's fame had spread across America. This afternoon it would serve as the official aperitif at the Stock Exchange's traditional New Year's Eve party. The members, their staff, wives, and mistresses had all been invited. Nevertheless, there would be some notable absentees. The elder John D. Rockefeller, who still owned a seat on the exchange, had not visited the building for years. Jack Morgan, son of the legendary J.P., was a member, but had never entered the exchange to do business, let alone sip clam juice with clerks in a drab public gallery. Many of the senior members, veterans who had traded for 50 years and who still talked mistily of the great stock market panic of 1893, had slipped away before the end of trading to reminisce in one of the speakeasies tucked away in side streets around the exchange. Several of the affluent younger brokers decided to miss the party because there were more promising celebrations to attend uptown. Mindful of their mystique and social position, they knew it would be easy for them to pick up glamorous flappers at one of those parties. Some of the biggest market manipulators would be absent because they were not members of the exchange, preferring to mastermind their financial operations from outside. They were therefore not eligible to be invited to what was in essence a glorified office party. Like all such gatherings, shop talk predominated. Almost everybody had a story to tell of a spectacular killing. An actor had made $40,000 from vanadium steel, Schulte cigar stores, Public Utilities of New Jersey, and Wright Aero. A waiter at the exchange's luncheon club had resigned, $90,000 better off, as a result of tips passed on by his customers. He had successfully plunged into the market with $5,000 saved from 10 and 25-cent tips. A stenographer was $15,000 richer through selling General Motors stock she had only had for 2 days. The girl promptly bought a fur coat and reinvested the balance in Anaconda Copper, a stock widely tipped to rise spectacularly in early 1929. Everybody in the gallery knew what a tip could do. Only last March, John J. Raskob, a director of General Motors, had uttered a few sentences of optimism about the automobile industry, and his company's stock had driven upward 12 points. Raskob was a man to watch. So was Arthur Cutten. 6 months earlier, Cutten had moved his operations from Chicago to Wall Street. He was dealing in 200,000 shares a day, Armour and Company, Radio, Montana Power, United States Cast Iron Pipe. His takings so far were put at $100 million. It was this sort of talk that made an otherwise dull party hum. An impromptu cabaret spot by a group of page boys caught the mood, their piping voices summing up a national attitude. "Oh, hush thee, my baby, Granny's bought some more shares. Daddy's gone to play with the bulls and the bears. Mother's buying on tips, and she simply can't lose, and baby shall have some expensive new shoes." In a corner of the gallery, a group of young traders stiffened their clam cocktails with shots of potent homemade whiskey and listened eagerly to the words of Michael J. Meehan. Just 15 years before, Meehan was selling theater tickets at 71 Broadway and making about $5,000 a year. Now he was possibly the best-known broker in America and president of his own firm, with 8 stock exchange seats, the largest number ever held by a commission house. In 1920, when he had bought his first seat, he had 2 employees. Now he had some 400, with an annual payroll of around $600,000. When Meehan had become a broker, he had made only $18 profit his first month. He fell back to selling theater tickets to augment his income. 2 years later, he had saved enough to lay out the $90,000 needed to buy his first seat on the exchange. His latest had cost him close to $500,000. He hadn't blinked when he'd written the check. Money, Meehan was fond of telling newspaper men, was there for the spending and making. Short, with the first hint of a potbelly, he wore steel-rimmed spectacles that made him look older than his 38 years. He worked hard to maintain his casual, offbeat image. He loved it when the media called him one of the boys, when they reported he still wore soft shirts and did not care a whoop whether his tie is the latest thing from London or whether it is knotted at just the proper point under his Adam's apple. That sort of publicity helped to divert interest from his tough, ruthless style of operating, typified by the way he had speculated in and made a fortune from one of the most glamorous of all new stocks, RCA. Mike Meehan was the exchange's specialist in radio. Most buy or sell orders of the stock had to be made through him or members of his firm at Post 12. During 1928, he had helped engineer radio's meteoric rise and made for himself an estimated $25 million. Now he was preparing for a fresh foray on the conservative Anaconda copper stock. In great secrecy, Meehan was planning to organize a pool with funds from such financial giants as Percy Rockefeller, the Fisher brothers, and John J. Raskob. He expected he would have no difficulty in finding other participants whose money would swell that available to over $30 million. Then they would act. There were still weeks of careful groundwork to be laid before the first moves in the market would be made. But now Meehan was able to relax, sip a drink, and be glad that this New Year's Eve the orchestra had not singled him out by playing an Irish melody. He hated all that ethnic nonsense. Down on the stock exchange floor there was now a milling crowd of men and women, some of them dancing, many of them fortified from hip flasks, the fashionable answer to Prohibition, now in its 8th year. 2 men moved ostentatiously and ceremoniously among the guests. Each was aware of his own importance. The elder was Edward Henry Harriman Simmons, president of the New York Stock Exchange these past 5 years. The spiteful said that Simmons would really have preferred canonization, election to the papacy, or the role of Lord Mayor of London, that he had accepted only as a poor alternative the most important electoral office in the financial world. His few friends said that he was born for his exalted and unsalaried post. For them he epitomized the Puritanism of those 24 brokers who in May 1792 gathered under a buttonwood tree and drew up a written agreement to deal only with each other on a common commission basis, so forming the exchange Simmons now presided over. His few public pronouncements on the market were predictable and ponderous. The press preferred to quote his companion. Richard Whitney was vice president of the exchange, and probably the most unpopular man among the rank-and-file members ever to hold that office. They resented the way he calculatingly charmed reporters while treating his colleagues in cavalier.
Sample complete. Ready to continue?